Now, I get that most of us long-term investors would probably be best off by buying into something like the SPY, the S&P 500 ETF Trust, investing a considerable amount of money on a yearly basis, reinvesting the dividends along the way, and riding off into the sunset with a nice healthy nest egg by the time we're, say, 45, 55, or 65 years old. But for those investors that don't necessarily want to wait 10, 20, 30 years to see some massive returns, at least in the form of income, in this video specifically, we're going to go over 5 different ultra high yielding dividend paying ETFs that are going to give you a ton of income on a monthly basis, and it's not going to take you 20 years, it's not going to take you 10 years, you're going to get paid next month, or basically within 30 days or so from when you invest into these high yielding ETFs. Now, every single one of these ultra high yielding ETFs are not only positive as far as total return goes, but for the most part have not decayed all that bad. And on top of that, they yield anywhere from say 10, 20 to 30+%. So you're going to want to stick around to the end. So if you want to see which 5 ultra high yielding ETFs I think would be good opportunities to look into to get some massive amount of income ASAP, make sure to drop a like down below, stick around, and let's get right into the first one. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the markets. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. Now, the first ultra high yielder is probably one of my favorites we're going to talk about throughout this entire video. I'm talking about SVOL, the simplified volatility premium ETF. This is an ETF that's become more and more popular. Honestly, over the last year or so, I've been seeing a lot more investors of all shapes and sizes buy into this one. Now, if you're not familiar, SVOL basically shorts the VIX. So whenever the volatility index is trading downwards, SVOL is going to trade pretty good. Now, because of SVOL's unique strategy, this ETF not only has basically traded sideways over the last year or so, which I'm going to show you in a second, which is not bad considering it offers around a 16.08% distribution rate. Around 16% yield is not too shabby, and a distribution that's paid out monthly in the form of around 30 cents more or less over the past several months. Now, like I said, SVOL, at least over the last year to date, has mostly been trading sideways. It is down around, I guess, 1.5% to 2.8% more or less, at least as of filming this video. But that's not bad whatsoever if you are earning, let's say, 16, 17% yield. Now, longer term, SVOL has decayed around 12%, but keep in mind this is since 2021, and ever since around 2022, SVOL has traded mostly sideways or even up a little bit, which is when I started buying into it. But not only that, I promised you that every single one of these 5 ultra high yielders would not only give you a ton of income ASAP into your portfolio, but also offer a positive green total return, which for SVOL, if you would have reinvested the dividends along the way, over 3.36 years, we're talking around 11% on average, or 41 and some change. Total return percent, which is not bad whatsoever, around 31% total return if you spent the dividends month after month. All to say that SVOL is one of my favorites. It yields around 16, 17%. Look into it if that's what you're looking for, and or check out some of my other videos because I dig into this one pretty deeply quite often. Another one of my favorite ultra high yielders that I just started buying as of this year, I think, is QQQI, or the Nasdaq 100 High Income ETF, another ETF with a very unique strategy and an ETF that's done pretty well so far. Now, this ETF has a 15.16% distribution rate, so again, you are going to be getting exposure to massive yield and a ton of income from day one ASAP if you buy into something like this. Now, the target benefits for this ETF strategy, it says it seeks to distribute high monthly income generated from the constituents of the Nasdaq 100 index and implementing a data-driven, you guessed it, cover call strategy. Now, on top of that, this ETF is tax efficient by using classified Section 1256 contracts. And most of this ETF's income has been paid in distribution, so again, those are taxed very favorably. But on top of that, this ETF looks to sell and maybe buy at times NDX index options, which could also capture some upside, which is huge, especially for cover call style ETFs. Now, like I said, with QQQI, we're talking around a 15, 16% yield, so I think we're all on board there. And best of all, on the max time frame, this one's up around 2.72%, so absolutely no NAV decay as of yet. And even though QQQI has not been trading all that long, over the past 0.64 years, we're talking around a 19.21% annualized gain, or around a 12.21% total return. Now, even without dividends reinvested, you're still receiving around an 18.4% annualized gain, at least as of right now. And again, there's different ETFs that might do better or worse in the market, but for those investors out there that want income ASAP, like myself included, QQQI is definitely one worth looking into. Now we're going to get into some crazier stuff. This is a newer holding of mine. If you haven't came across one of my videos that I talked about it as of yet, I did make a video on this one, but I'm talking about ZIVB, the 1x short VIX midterm future strategy ETF. This ETF is basically SFOL, but think of SFOL on steroids. Now we're talking distribution rate of 27.13%. And once again, by shorting the VIX, this ETF strategy is basically hoping that the VIX volatility index trades downwards or sideways at best. Now with a 27% distribution, I'm sure I know what you're thinking. Wow, this is another ultra high yielder junk ETF that's probably trading down over time. Absolutely wrong. This ETF is up 42% on the max time frame. Considering this ETF was trading at $14 in 2023, now over $20 per share. And keep in mind, this thing pays a ton of distributions. We're talking anywhere from around 49 to 50 cents on a monthly basis. So with ZIVB, we're talking around a 67% total return with dividends reinvested along the way over the last 1.42 years, which is absolutely insane considering this ETF is relatively new. And again, I get it, this ETF is very, very risky, just like anything in the stock market, so play with your own risk, of course. But this ETF, because of its strategy and because of how well it's done so far, has definitely found a spot in my portfolio personally. A few more ultra high yielders to go through. This is another one of my new favorites, SPYT. This ETF has a 20+% distribution rate. It pays out monthly also. And best of all, because of this ETF strategy and what it aims to achieve, the distributions are very, very consistent. But it says right here, SPYT strategy overview. It's actively managed, dedicated to generating current income. Our strategy revolves around holding shares of ETFs to track the S&P 500's performance and engaging in selling of daily credit call spreads on the index. Now, by doing this, it has the potential to generate some massive income, and at least like I said so far, it's definitely done so. We're talking a consistent 33 cents more or less every single month since inception, and I get it, it's relatively new, but still so far so good. Maybe even cooler than that though, SPYT, even though it yields around 20%, we're talking basically flat as far as price return goes, and a lot of times that's not what you're looking for as an investor. You don't want your price performance of a stock or ETF to go sideways, but again, when you're buying into something with income potential being the target, an ETF like this trading sideways and paying me 20% per year, now that's something I can get behind. Also important, the total return, just as you guessed, is probably going to be around 20%, at least if it keeps trading like it is, 19% so far, and 17.8% without dividends being reinvested to more or less. Now another Defiance ETF, the last and final one that's also yielding a crazy distribution. We're talking 105.45% as of right now. We're talking QQQI, the NASDAQ 100 Enhanced Option Income ETF. Now it says this ETF is the first put-right ETF using daily options to seek enhanced yield for investors, paid out monthly. And at least so far, look at some of these distributions, guys. We're talking $1.10 back in September last year, $1.93, 62 cents. They're sort of more or less all over the place, but one thing's for certain, they are pretty big. I mean, look at this last one, paid out $8.30, $3.45. That is a massive distribution. Now, I also think it's fair to note that this ETF is not going to pass our NAV decay check. It's down around 40%, so this one is going to come with that risk, of course. But I think it's still fair that if you were to look at the distributions and, of course, the price return or lack thereof, this ETF still has a total return of 15.04% with dividends reinvested, or around 11% total return without. Not the best in the world, we've seen better, but still, it is positive total return, and it does offer some massive income potential, at least potentially. So there we have it. Those are 5 different ETFs that are probably going to allow you to generate a lot more income from day one compared to other ETFs and stocks across the markets. Now, like I said, every single one of these ETFs as of right now offer a positive total return and strategies that you might be interested in. So definitely take a look and dig deeper into any of them that you find fits. But now lastly, I want to hear from you guys down below. If you were to have to choose one of these, buy into them and hold it, which one would it be and why? Let me know in the comments down below. If you enjoyed this video, make sure to please drop a like in it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.